Welcome to the Wealth Lexicon. Let us decode the language of financial power. Focus your mind. Most people think wealth means earning a lot of money. They imagine a high salary, a big business, or a successful career. But history shows us something very different. Some of the highest earners in the world, famous athletes, lottery winners, and high-paid executives, often end up broke within a few years. Meanwhile, others with ordinary incomes quietly build lasting wealth that supports their families for generations. So what is the difference? Why does one person keep their money while the other loses it? Today, we are going to explore one of the most important ideas in financial history, the strict difference between income and assets. We will explain why confusing these two concepts is the primary reason most people remain trapped in the financial rat race, regardless of how hard they work. In this episode of Wealth Lexicon, we will look at, first, how kings and merchants defined wealth throughout history. Second, why income alone does not create financial security and the trap of lifestyle inflation. Third, the precise definition of an asset. And finally, the timeless principle that separates those who earn money from those who build wealth. Please note, this is educational content only and does not constitute financial advice. Our goal is to upgrade your financial vocabulary and historical understanding. Let's begin. For most of human history, wealth was never measured by a monthly salary. If you went back to the 16th century and asked a merchant or a landowner how much do you earn per month, they would look at you with confusion. The modern salary system is actually a very new invention in human history, becoming common only during the Industrial Revolution. Before that, the wealthy did not focus on paychecks, they focused on ownership. Kings, aristocrats, and merchants asked a different question. What do I own that continues to produce value? Land was wealth because it produced crops every season. Ships were wealth because they carried trade across oceans. Workshops were wealth because they produced goods. These were true assets, things that worked even when the owner was not working. A farmer could sleep while his crops grew. A merchant could rest while his ships traveled the trade routes. Wealth was about the ownership of productive resources, not the constant selling of one's time. Today, we have lost this perspective. We measure success by the size of the paycheck, not the size of the asset column. This shift in thinking is the root cause of modern financial stress. Now, let's talk about the income trap. Income is important, it pays for survival. It puts food on the table. But income has a fatal flaw. It depends on continuous effort. If you stop working, the income stops immediately. This creates what economists call income dependency. The dangerous part is what happens when income rises. This is a phenomenon known as the hedonic treadmill or lifestyle inflation. As people earn more, they almost immediately spend more. They move to a bigger house, buy a luxury car, and eat at expensive restaurants. Their expenses grow at the exact same speed as their income. From the outside, this looks like success. But financially, it is a position of extreme fragility. If the job is lost or the economy turns, they are bankrupt within months. This is why high-income earners are often not wealthy. They are simply high-transaction individuals. They process a lot of money, but they keep none of it. True wealth is not about high income. It is about decoupling your financial survival from your daily labor. So, what exactly is an asset? In the strict philosophy of wealth, an asset is not just something you own. Your personal car, your clothes, and your electronics are generally not assets in this context because they do not put money in your pocket, they take money out. An asset, in simple terms, is something that 1. Holds value over time, 2. Has the potential to produce income or capital growth, and 3. Does not require your constant personal labor to exist. Historically, assets have included fertile real estate, shares of productive businesses, intellectual property, gold, and commodities. The key idea here is not fast profit or speculation. The key idea is ownership of a vehicle that stores and grows value. When you buy a share of a solid company, you are becoming a part owner of a system that generates value. When you buy rental real estate, you are owning a system that provides housing in exchange for cash flow. Assets allow you to separate time from money. That separation is the foundation of freedom. In the modern world, the pressure is to focus entirely on income. We are taught to get a better job, work more hours, or start a side hustle to make more money. While increasing income is a great first step, it is not the final destination. Without converting a portion of that income into assets, financial progress is an illusion. It feels like running on a treadmill. You are sweating, you are working hard, but you are not moving forward geographically. Historically, the families that built lasting, dynastic wealth focused on a simple strategy. They lived below their means and used the surplus capital to acquire ownership. They did not do this quickly. They did not look for get-rich-quick schemes. They did it steadily over long periods of time. This approach is boring to the average person. It is less exciting than gambling on the latest trend, but it is far more durable. So here is the timeless principle to take away from this episode. Income helps you live today. Assets help you build freedom for tomorrow. Confusing income with wealth is the most common financial mistake of our time. Wealth is rarely built in dramatic, exciting moments. It is built quietly in the background through ownership, patience, and the discipline to buy things that pay you rather than things that cost you. That is the foundation of what we call sovereign wealth, financial stability that stands on its own. Thank you for watching Wealth Lexicon. If you want to understand how money truly moves through history, psychology, and strategy, make sure to subscribe. We will see you in the next episode. Knowledge without action is poverty. Apply this vocabulary today. Subscribe to Wealth Lexicon.